Hi guys, welcome back. Today we're going to be looking at Rivian Automotive. As you can see, over the last 5 days, this EV company has taken the market by storm, up more than 60% in the last 5 days, and valued at $146 billion market cap. It is the biggest company on the US market with no revenue whatsoever. And as an investor, this might sound quite shaky and quite unheard of, but if you've been tracking the market recently, you can see investors are betting long, betting big, and are really hoping to catch on to one of the breakout companies that will be maybe the next Amazon or Tesla over the next 10 to 20 years. So today we're going to be trying to be looking at where Rivian can be maybe 10 years down the line, whether the current market cap is worth it, what's a better price if you do want to invest in this company, and we'll be looking at their Ford and Amazon backing as well, and then finishing off with just some technical analysis as we usually do. Uh, if I remember later on, there should be timestamps in the video if you want to click on to later in the video. If not, thanks for watching anyway. On to the video. So the first thing we're going to be looking at is this Motley Fool article. So for the fourth day in a row and the fourth day since its IPO, the shares of electric car upstart and purported Tesla killer Rivian Automotive marched higher on Tuesday. Through 10 a.m. Eastern Standard Time, Rivian shares have already gained another 6.3%, despite there being no news today to explain the enthusiasm. So what? No news about Rivian, that is to say, but as it turns out, one of Rivian's competitors, the electric vehicle space Lucid Motors, had just reported its third quarter 2021 earnings last night, and it seems that investors are pretty excited about that one. Although Lucid reported wider losses and lower sales than anticipated, investors responded positively to the luxury electric cars maker's announcement that its Lucid Air sedan just won the Motor Trend Car of the Year award, and they were also pretty pumped to learn that Lucid booked 13,000 reservations for new car sales in quarter 3 and grew that number past 17,000 over the 6 weeks since quarter 3 ended. And Lucid was able to announce that it began producing vehicles to fulfill those orders at its advanced manufacturing plant AMP1 in Arizona, where a second phase of construction has already begun to add 2.85 million square feet of manufacturing space. So the next thing we're going to be looking at is just some Seeking Alpha analysts on Rivian Automotive. The first one is by the Asian Investor. So Rivian did not follow other EV makers and listed its share via a blank check company being a SPAC. SPACs have surged in popularity in recent years because they allow companies to go public faster and cheaper through an IPO. Rivian listed its shares on the exchange through a normal IPO, however. The offering price was $78, above the initial price range of $72 to $74, and the shares quickly allowed Rivian to raise about $12 billion from the IPO, creating long liquidity runaway that all but guarantees that the EV startup can finance the market introduction and production ramp-up of its two major EV products. Rivian's market valuation at the time of the IPO was about $77 billion. Shares of Rivian have been surging since its IPO last week and hit a record high of $135, now at $172, so it's a bit after this article was written. And it hit a record high, implying a more than 73% return. And because Rivian's soaring share price, the current market capitalization of the EV maker now stands at $146 billion. This makes Rivian the most expensive pre-revenue electric vehicle company in the world, and Rivian's market value has also surpassed the individual market values of General Motors and Ford. General Motors and Ford are two of America's largest car brands that together produce hundreds of thousands of vehicles every year. The billions of revenues both companies achieve from such vehicle sales, however, generated from a portfolio of dozens of different models. Rivian, however, has just two models, the R1T, an electric pickup truck with a range of more than 300 miles and a starting price about $67,500, and the R1S, Rivian's all-electric sport utility vehicle with an EPA estimated range of 316 miles and a listing price of $70,000. As of October 31st, 2021, Rivian had only produced 180 R1Ts and delivered 156 of them. And by the end of the year, Rivian plans to produce about 1,200 R1Ts and 25 R1Ss and deliveries of 1,015 respectively. Rivian valuation relates entirely to its sales potential in the future, not the sales that it is currently achieving. And this is important to note because I have seen a lot of people on YouTube, all across the internet, talking about how currently Rivian does not have the sales to back up its valuation. And while this is true, while this is important, we do need to take into account management's future guidance about where the sales will be maybe a year from now, 2 years from now, 5 years from now, 10 years from now, and base the valuation based on that. Because when you're looking at long-term investing, slightly overvalued companies right now could actually be a multi-bagger maybe 10 years from now, even if it is currently overvalued, as Rivian is quite clearly with more than $146 billion in market capitalization. So Rivian, based off estimates, provides a registration sentiment, sees the global total addressable market about $9 trillion for its electric vehicles. This total addressable market size includes both consumer and commercial markets. On the consumer side, they see an $8,332 billion or 8.3 trillion, which includes the R1 platform, additional vehicle platforms, and associated lifetime revenue, out of which 954 billion are in United States, Canada, and Western Europe. On the commercial side, they see about $0.65 trillion, which has the RCV platform, the additional vehicle performance, and associated lifetime revenue. And out of that, the United States, Canada, and Western Europe make about $210 billion of the commercial market. So investors are hungry for EV stocks that promise a strong market cap and sales growth. So Rivian's IPO came just at the right time. However, Rivian is not generating any revenue yet and posts continual losses, which investors casually brush aside. Operating expenses for the first 6 months of financial year of 2021 were nearly $1 billion, and Rivian is expected to make significant losses in the coming years as it ramps up its manufacturing and starts to make customer deliveries. And that is kind of expected. It's not really a big surprise to investors there as well. So I'm not surprised that it hasn't been taken into account to a lot of investors, the price that they're willing to pay for this company. Production and customer deliveries are slowly ramping up. Rivian is set to make significant progress next year. This is because the EV maker is flush with cash after the IPO, and it has two big companies as backers, Ford and Amazon. Amazon has a 20% stake in Rivian and has ordered 100,000 electric vehicles for its fleet by 2030. Ford is said to have a 12% stake in the EV startup, and after the surge of Rivian's share price, the stakes of both the companies in Rivian are worth billions of dollars. And this is quite important because this is the reason that many companies or many investors believe that Rivian could be a massive rival to Tesla with the backing of Ford and Amazon. Ford being one of the most prominent vehicle manufacturers in the world, and Amazon being one of the largest companies in the world. They both have a lot of capital that they can invest into Rivian, and with a very, very strong backing, with marketing, with technological costs that they may cover, Rivian does really have the potential to make a game-changing shock to a currently very Tesla-heavy EV market. So the price to sales valuation is hard to justify, and I do agree with the author with this one. So they estimate that Rivian can grow about 20,000 to 30,000 vehicles in production and deliveries by the end of financial year 2023. Assuming an average vehicle price of $70,000, Rivian is looking at potential sales to $1.4 to $2.1 billion in 2 years' time. Rivian is unlikely to post any operating net profits in the coming years because the firm will do whatever it can to reach mass production capacity. It took Tesla more than a decade to become profitable and achieve this only with considerable volume. And with $1.4 billion in projected sales, shares of Rivian can sell up to 80 times sales. This is sales, not profit. And most EV makers with an existing product sell for a price to sales about 5 to 8, with Tesla being the only exceptions with a higher sales multiplier factor, with Tesla's price to sales ratio being about 15. And Rivian's currently is at 80, so its price to sales are way out of expectations, even when we're looking at that 2023, which is about 3 years down the line. About 2 years down the line, sorry. So the last thing we're going to top it off is risks with Rivian. So Rivian now has the highest market value of all EV companies that have no sales, which implies that investors fully values Rivian future revenue potential and perhaps already overvalue it. Because of Rivian's high valuation, there is a considerable risk that after this initial pop, the valuation cannot be sustained. Other EV makers like Lucid Group and Lordstown have already elicited strong first reactions on their listing debuts, but valuations have dropped significantly after the initial excitement waned. And right after this, we're going to be looking at other previous electric vehicle IPOs that have started off with a bang and then slowly dwindled down, going down maybe 40 or 50% over the few months after their IPO, and whether whether it's possible if Rivian could have the same thing happen to it as well. So Rivian still has no sales and customer deliveries have only just begun. This means that Rivian still faces considerable challenges related to the ramp up of production and vehicle deliveries. Additionally, production delays, safety recalls, or unfavorable reviews could hurt Rivian's market perception longer term. Competition in the EV sector is going to increase as Ford and General Motors are set to launch their own EV pickup trucks in the financial year of 2022, and they, of course, being one of the largest companies in the vehicle space, have the capital and have the production capacity to actually mass produce this right from the get-go. So even after this, even after Rivian has a massive price to sales, even after Rivian has no revenue whatsoever and is expected to deliver maybe 1,000 vehicles this year alone, why do people still believe that Rivian can grow in the future? So it was the optimism from the management, the sky-high numbers in forecasts, and the patronage of one tech and one industrial giant that made demand for this stock rise up to such colossal proportions. But no one is trying to answer the question is how exactly is the company going to send 1 million vehicles in trucks and SUV segments in less than 9 years? Yes, the company received $12 billion from its shareholders for expansion and has support from Ford, but 9 years seems crazy given the relatively high price of the cars produced, with starting price between $67,000 to $70,000 USD. Another reason for Rivian's currently rich valuations may be Tesla's failure to launch its Cybertruck, which has been delayed in mass production and is expected to be full swing by 2023. Just in relation to that, the whole hype of this company is that it's backed by Amazon, the giants of their industries whose patronage have attracted so much interest in Rivian. Amazon not only has a stake in the company, but it's ordered 100,000 vehicles from it, the largest order in EV market history ever. But to this point, Rivian plans to deliver only 10 pieces by the end of 2021, and the Illinois plant has an annual capacity of 150,000 vehicles, and Rivian intends this to increase that to 200,000 by 2023, targeting the long-term goal of 1 million vehicles before 2030. Just talking about the Cybertruck again, Cybertruck's success has been delayed due to manufacturing delays. However, it does have Tesla backing it, and it is one of Tesla's showpieces, if you may. So I doubt that Rivian could really make a dent into Tesla's Cybertruck sales, as Tesla can easily reach mass production at a very, very quick rate and has a lot of investors behind it as well. However, there is one competitive advantage of Rivian, its flexibility and adaptability due to its small production scale. But other EV startups have had the same advantage when they went public, and I suggest you look at their share price performance to understand what behavior we should or could expect from Rivian's stock price. So the first thing we'll be looking at is XPeng, and then we'll be moving on to Lucid and Canoo. So when XPeng did its IPO, the company had phenomenal revenue growth, more than almost 22 or 23,000 percent revenue growth in 2019 compared to 2018. The company very quickly approached break-even in terms of gross profit for 6 months of 2020, reducing its gross loss from 79 million to a loss of 5.1 million, which is an improvement of more than 92%. It produces and still produces SUVs and four-door sports sedans for the Chinese EV market, which is forecast to grow at a compound annual growth rate of 28% between 2019 and 2024. As with Rivian, there was a lot of talk about high-tech, data-driven approaches to expanding production. Hence, its offering also created a buzz in the pre-IPO and immediate post-IPO period. XPEV, which is XPeng, peaked on November 23rd, 2020, amounted to 214% in gains in almost 3 months, after which the lockup period ended and shares quickly flew down, the result of the sale by pre-IPO investors who wished to realize their gains, and the stock still hasn't recovered since that fall and is trading more than 33% lower than what it was at its peak. The next example is Lucid Group, the second largest company after Tesla The current market cap of the company is about $71 billion, which is only 47% less than Rivian's current one. Lucid went public through a SPAC when the first rumors appeared that Churchill Capital IV was negotiating with the company, and the price of the SPAC increased by 36% per day and then continued to rally after the facts, reaching the peak of on February 18th, 2021. But already on February 23rd, CCIV fell by 43% following the official announcement of a merger with Lucid, and by the end of March, Lucid was valued about $40 billion, expected to bring $23 billion in sales and $5.28 billion in gross profit in 2026. For a long time, the stock was trading flat until the news came out that it was going to deliver the first of its 520 AirDream vehicles to customers, which allowed the stock to start a new rally recently. Canoe was another SPAC-listed company, and it is a prime example of how the high of having risk of buying EV stocks is, no matter how innovative they may seem to investors. At the time of going public, the company also had no revenue. The first car was supposed to be delivered by 2022, and many perceived Canoe as a different kind of BEV company, utilizing a skateboard and top hat architecture that reduces time to market and costs, but the actual stock price performance speaks for itself louder. Apparently, the reason for the company's failures was that the enormous pressure on the market due to the competition, as well as the problems of production expansion. Ultimately, this apparently led to a disagreement with the team, and GEOV took some radical actions which they could not but affect the company negatively. All of this tells it that Rivian is very, very likely to have serious problems if the high expectations that the management has instilled in investors are not met. It makes no sense to compare the company with Tesla, which has been trading on the market for many years and is inherently a pioneer among EV manufacturers. When the company was building its infrastructure and actively investing in technology, the market looked much smaller and the peers were less competitive. Now, the hype around Rivian looks unnecessarily inflated by the media because, in fact, the company does not do something that could be repeated by most of its competitors. Yes, the technological part may be different. This is not the new kind of innovative breakthrough that, for example, Sono Group can show. This looks like a classic bubble, which is just an emotional manifestation of the stock market's attitude towards EV and nothing more. And when it's deflated in a matter of time, whether the company will be able to come back when it falls as Lucid did, nobody knows. But there will definitely be a fall, and at best for the bulls after a lockup period about 180 days. I would not short Rivian amid its current market cap of more than $100 billion, but you do need to hit yourself in the hand at such moments in time because it is impossible to assess the scales of a circus that we're seeing right now. You might think that I don't need to understand EV, perhaps, but even Tesla's current valuation can be justified, and we've heard about there. But this basically talks about how you need to ignore the current market surge and you need to look at the long-term potential of Rivian, which the author doesn't believe it really has. Last thing we'll be looking at is some technical analysis. Look, there's not much to see. The stock has been on the market for about 4 days. It surged greatly, starting off at from a low about $95 all the way to about $180. Currently trading at $170. Personally, it seems grossly overvalued. It has a price to sales ratio of close to 80, while even Tesla, which some people consider extremely overvalued as well, has a price to forward sales about 15. So I just don't think Rivian has. I do think Rivian has a potential, but I do not think it is a valid investment as of right now. I would wait for the market to cool down, maybe 6 months down the line, maybe even 3 months down the line, however long it takes for the bubble to burst, and maybe reevaluate the stock then. Maybe if it comes down close to $100 or maybe $80, closer to then, because the stock is expected to crash. I will be very, very surprised if it doesn't. Maybe reevaluate the stock then, and if the stock does crash, maybe in a few weeks or a few months from now, I'll do another video on the stock looking at its long-term potential and whether the price justifies that. That brings me to the end of the video. It has been about 20 minutes now. So if you made it all the way to the end, make sure to subscribe, hit that like button, and comment what you think Rivian will do, whether you think it's overvalued, whether you think the Amazon and Ford backing can actually help it through, and whether it can actually be a serious competitor to Tesla, which I would like to see with the EV market being a very dominant Tesla market as of right now. So that brings me to the end of this video. If you do enjoy, consider subscribing, and I'll see you in the next video. Bye.